Yo, what is going on, guys? What is going on? So, all right, huge news, obviously. The Fed raised rates by 0.5 percentage point. This was expected. As you guys know, all along, we've been looking at the FOMC Market Watch tool. And really, there weren't many people that were expecting more than a 50 basis point rate hike. So, currently, the total Fed funds rate is 0.75%, in line with what was expected. Now, let me know if you guys can hear me or not. Jay Powell speaking. Where's this duster at? Yeah, so Jay Powell is speaking right now. Although the Fed policy already came out, I'm having a little bit of trouble with the internal audio. So I was testing it beforehand, and I wasn't able to get clear audio from the internal sound system on this computer. So anyway, let me know any questions that you guys have regarding what happened today. Any questions you have regarding day trading, technical analysis, etc. And we'll get into it. But basically, so the summary of it is the Fed raises rates by 0.5 percentage point. This was expected. Now, how are the markets reacting to this? Let's get into this. So the markets currently are really mixed, right? So if you guys are part of the Discord, you know that we ended up buying calls way earlier in the day because we expected there to be some sort of buy the news situation where after the Fed released policy and the policy was rather in line with what was expected, then we would likely see a boost in the indices, at least in the short term. Right now, you're seeing a lot of volatility with the way that the indices are reacting. So the Nasdaq, was up 0.5%. Now it's down by a full percent. And this is the type of volatility that we expect, because what happens is, obviously, it's as I said, the news is out already, right? Prices of stocks are already demolished. So what action is there left to do besides to buy? There isn't really going to be a mass sell-off here unless the Fed announced something completely unexpected. So if the Fed front-loaded and said, guess what, guys, we're actually going to be raising rates by 75 basis points or a full basis point or a full point, which I don't think anybody was expecting, then at that point you can expect the market to tank. However, what they actually released was pretty much in line with what was expected. Now, there's one very interesting, and I saw this news story come out. I've actually never seen anything like this before, but someone got their hands on the actual document, the FOMC policy document, and the differences between what this document looked like in March and what this document looks like currently. Let me see if I can actually, is there a way for me to enlarge this? Let me just do this. And you could see here in red what was actually highlighted out or into the document, right? And the part on the, when it comes to actually reducing the balance sheet, you'll see here it says, in addition, the committee decided to begin reducing its holdings of the Treasury securities and agency debt and agency mortgage-backed securities on June 1st. This red part was the part that was recently added. On June 1st, as described in the plans for reducing the size of the Federal Reserve balance sheet that were issued in conjunction with this statement. So, thank you, Hans Bez. Hans Bez, thank you so much for donating $20 to St. Jude's. Oh, by the way, guys, I always forget to say this. Leave a thumbs up if you are on the stream so that other people can find this really valuable information. I think it's valuable. Leave a thumbs up. And also, yes, instead of giving me money or super chatting me, use that little donate button. Donate to St. Jude's. Knowledge Seeker as well. Thank you so much for your $5 donation to St. Jude's. And you did have a question that I'll get to in a second. Okay. So what was I saying? Yeah, so this part, June 1st, right? June 1st, this wasn't expected. What we expected really was based on what Jerome Powell said, for the balance sheet to start running off towards the end of the year. However, this shows us that the Fed is actually more panicked about inflation than we think. Now, they are not going to attack the interest rates per se to portray that panic. What they are going to do is try to sort of do this two-pronged approach where you have the interest rate hikes that are in line with what is projected and what is expected. And then now you have a faster reduction of the balance sheet. See, there's so much focus on the interest rates because I think there is a direct correlation between the interest rates, the federal funds rate, and something like the 10-year treasury yield or the typical 30-year mortgage rate. But there isn't really a direct link between the reduction of the balance sheet and things that affect the economy, at least on its face. So if you announce to the world that, hey, we're actually going to be raising rates more aggressively, that is more likely to have a psychological shock and, an actualized shock on the market as well as the economy versus saying, hey, we're looking to reduce the balance sheet a little bit faster. Even though that does have some material consequences, it is not seen as serious as something like raising rates too aggressively. So they're trying to, this tells me that they are actually scared of inflation more so than once thought, but they are looking to tackle it in a way that will not sort of upset the apple cart, if that makes sense, right? Now, we did have an amazing trade on, let me see if I can get to it. We did have an amazing trade on the Qs. So earlier in the day, this was like 727. And by the way, if you want access to all this stuff, check the link in the description. We're actually giving almost 30% off monthly memberships for new members. So use the coupon code in the description if you'd like that. But we sent out a 320 call. 0 DTE means 0 days to expiration, which basically are the calls that expire today. These were selling for around $1.50. And I bought these in the morning because, well, one of the reasons was because of where the Qs were trading. So if you look at the Qs on an intraday chart, let's look at this. And the NASDAQ, the reason that I stuck with the NASDAQ is because the NASDAQ seems to be more volatile as it relates to interest rates, right? Because the NASDAQ represents more high-tech growth companies. So if you look at the 5-minute chart, whoops. Oh, and I'll get to a question about fibs as well, because someone in the Discord had asked me about fibs. But basically ended up buying these calls when we had retested, let's see, it was around 7:30ish. So I was basically looking to play a bounce off of this level here. Let me get to it. And I was okay, as I said in the alert. I think this is around the time. Yeah, this is around the time that I bought the calls. The calls actually tanked a little bit, and then we saw this huge spike before the FOMC started talking. And, as I was saying here, I said willing to hold these until the Fed speaks and the news is priced in. Size accordingly beforehand so you're not panicking through the volatility, because I expected these to be volatile. And as I always say, you start managing your position before you enter, not after you enter, right? Because if you bought more calls than you should, and all of a sudden these calls are down 30%, which is very, liable to happen if you're trading 0 DTEs. If you're holding a large amount and now you see your account is down thousands of dollars, well, you're going to make stupid decisions like sell, right? But if you have a manageable amount and your thesis is true that, hey, there might be a buy the news situation, or at least we might see a run up before the Fed starts speaking, which has been the case the last, all through 2022 and all through 2021. When the Fed actually projects something that is mostly priced in, we tend to see a rally either before or after. Now we are seeing another rally as the NASDAQ is back in the green once again. So, because those calls were cheap and because we hit a major support level, I was willing to buy and hold these through all of that volatility, right? But if you oversize beforehand, there is no way in hell that you're going to be comfortable holding them. That's why managing your position starts beforehand. And we ended up scaling out of these. Like I obviously, if you guys are fans of the channel, you know that I don't really go all in or all out, especially with large-ish positions. So we started scaling out at around 36%, ended up closing it for 65%. These actually ran up to, I think, close to 100%. But, you know, profit is profit. I mean, we're talking about one day here within the span of a couple of hours. So that is one trade we did. And then obviously we took a trade. I didn't trade much in the options day trades. I only actually had 2 here because the indices looked so damn choppy pre-market. And sometimes it's better to sit out, something that most people will not tell you because they just want to send alerts galore. However, I'm comfortable saying just sit out. And these are really the only 2 tickers that I was looking at. And because both of these actually reported earnings yesterday, so I knew there would be some volatility. And we got a nice clean break on A&D below our level. Ended up closing those for around 50% as well. So those are really the 2 major trades that I took today. I know that folks in the Discord took more. But yeah, that is the summary of what is going on with the Fed. 0.5 percentage point rate hike. Gonna start reducing the balance sheet as of June 1st. That is going to cause some volatility. Now, let us talk about what is that going to do for the markets? Here I have some notes of what I wanted to talk about, and I'll get to your questions in a second. I promise I'll go over whatever questions you want me to go over. And guys, hit that thumbs up. By the way, hit that thumbs up. If you are watching this, it costs you nothing and allows other people to find the stream. Also, for those that missed it, we are running a promotion, $10 off the monthly memberships. Check the link in the description. Okay, so the yield curves, right? The 10-year 3-month yield curve, as you know, is the one that I'm paying attention to the most. The 10-year 2-year already inverted multiple times, right? The first sign of a recession. But again, when the 10-year 2-year flips, the recessions don't come until 7 to 24 months after usually. The 10-year 3-month is the one you want to pay attention to, and this one currently is still widening. So I personally don't think that we are close to a recession in 2022, right? And as a matter of fact, if you look at stocks, let me look at a larger time frame or a longer time frame. If you look at stocks, the NASDAQ is currently still in a bear market, right? But let's think about this. You have most of the news already priced in, right? Now you have the Fed policy priced in. We know that inflation, CPI numbers are not, that's not doing too great. However, the first sign that we get inflation dropping, right? So if the next CPI is less than the previous one, I think the markets are likely going to fly back to all-time highs. Now, I don't know that we break all-time highs, and I don't know how messy it will be. It could be an extremely messy ride, but I do think that we will get back to all-time highs because, stocks have already been beaten down. The first things to go were the hyper-growth stocks, and then there were the SPACs and all of the meme stocks and whatnot, right? And the blue chip stocks were the ones that were holding all of the weight, the Apples, Microsofts, Amazons. Now, those earnings are out. And I must say that in terms of earnings, those have really been a mixed bag. They're not as surefire as a lot of people have thought. So Netflix, case in point, terrible guidance, right? Slowed down growth, for the first time in a very long time, actually lost users as opposed to net additions. Amazon, right? Negative EPS. Who expected Amazon to report a negative EPS? Nobody. Obviously, you have Apple, which is a powerhouse. Apple reported stellar earnings, and so did Microsoft, reported stellar earnings, right? Google was pretty mixed on its guidance and its growth. So not a whole lot of the earnings were not great, to be honest. And a lot of mega cap stocks are showing sort of this large head and shoulders pattern going all the way back to last year, which is traditionally bearish. But how much more of a drop do you think there is between now and, say, the rest of the year if inflation starts to go down? I really don't think there is that big of a drop coming for most of the mega caps. When we're talking about 20%, by the way, 20% is a shit ton, right? I know that it's easy to get caught up in the drop of, like, say, the Cathie Wood stocks, where those are down 60, 70, 80%, some even 90%, right? But relatively, when you see Amazon, when you see Facebook, Microsoft, Netflix, when these stocks are down 20% or more, that is a huge, huge deal. I mean, I think Amazon had the largest drop since 2008. Netflix might have had the largest drop ever. Facebook might have had the largest drop ever, right? So these are historic moves, but are we closer to a bottom on the blue chip quality stocks? or do we still have another round to go? Meaning, if you're down 20% on, say, a Microsoft, is Microsoft likely or plausible to go down another 20%? Or would the, if it does drop, would that drop represent a more incremental decline, like say another 5% or another 7%, right? I'm willing to bet that we don't get another drop of the same magnitude that we've already seen, which to me signals that on some of the quality names, it is time to start nibbling, right? I don't think that this is a put all your cash in one moment, especially because, as we were saying, now that the interest rates are rising, we will likely see another increase on the 10-year yield, right? And I'm going to get into something that I really want to talk about. So you definitely want to stick around for this, which is what is the best investment right now to beat inflation? There is an absolute gold mine of an investment right now. I mean, a gold mine of an investment. And the only drawback is you can't invest as much money as you want to. You are capped. But I will share this with you in a second. So if the 10-year starts going up and you have investors pouring into bonds, well, bonds and stocks are now competing, especially with the Fed trying to remove liquidity from the system and making it more expensive to borrow money. You're going to see less liquidity in the markets, and the investors are now going to be faced with a decision of, oh, how much do I put in bonds and how much do I put in stocks? Meaning that stocks and bonds are now competing for a more limited pool of liquidity, right? And so if the 10-year approaches above 3%, you're going to see a lot of folks actually consider buying 10-year treasuries. Now imagine they get to near 4%, what's going to happen, right? So yeah, I mean, there's going to be that trade-off between bond. I think folks are going to start investing in bonds very soon, especially if we see an inkling that inflation is going to go down. Then people will feel a lot more comfortable investing in bonds, right, than they were before, because before the inflation picture was, rather unknown. So, all right, I talked a lot. Hopefully you guys got the gist of what the Fed was saying. Let me go over some of your questions. Z said, if enough people hit the like button, he will show his biceps. Follow me on Instagram, okay? If you follow me on Instagram, you'll see that I recap my trades all the time, and you will get as many personal pictures as you want, okay? Follow me on Instagram. That's all I'll tell you. All right, leave a thumbs up for Z to show his biceps. God damn, what is up with you guys? All right, inflation is damn high, said Powell. TLT drop. Question, fib levels, how to draw and use. Yes, Hans Bez, we will go over fib levels. Please keep the beard short. Is this considered short or long? That guy, 777. Tell me if this is considered short or long. Good to see you. Good to see you, Z. What's going on, Bruno? All right. Prepare the rockets, boys. I'm going to be honest. I have hundreds of Ks in the stock market. I'm stressing a little. That means it's time to buy, right? Well, I just went over that. Now that we know it was only 50 basis point hike versus expected, no, it wasn't expected 75 to 100 basis points, Michael. What was expected was a total Fed funds rate of 75 to 100 basis points, meaning adding the 0.25% that we already raised back in March, right? So when you add the 0.25 plus the 50 from today, you get a 75 basis point rate hike. Nobody was expecting 75 to 100 basis points today, like in one day, right? All right. Let's see. I'm a new member, by the way. There's a lot of info in that Discord. Highly recommended. Yes. Thank you, Jonathan. All right. Markets on up. Powell just said 0.75% not being contemplated. Yes, because as I just described, Sam, Powell is looking to use the balance sheet, the reduction in balance sheet, as a method of tackling inflation as well, because obviously all eyes are on the rates. I don't think enough people understand the balance sheet, and I don't think it has as much of a direct effect on some of the consumer instruments that rely on interest rates, right? So hopefully that makes sense. Top technical analysis, big picture, small picture, your picture. Okay, so we'll do tech. I'll go over Fib, especially because my boy Kinan, who I don't know is on this, but he asked me yesterday how to draw Fibs. So we'll go over that. Where is Kathy now and all the Kathy fan YouTubers? Kathy's still making appearances and still buying T-Doc for some reason. My dumb ass bought puts. Alvin, I mean, it's a learning experience, man. It's not intuitive to everybody why something would rocket on a day where everybody is projecting fear. But it's called, just like how you have sell the news events, there are buy the news events, right? So if everything has tanked, and let's see where the markets are at now, by the way. I'm sure they're up. Oh, nice. 1.5% on the NASDAQ. I should have held those calls. 1.5% on the S&P. 1.5% on the Dow. Very nice. But this is going to be volatile all day, by the way, and going to be volatile for the rest of the week, most likely. Just started following you on IG. Thank you, Randy. I hope you like it. Is the bottom done? Depends on your time frame. I don't know what you're talking about. TH10. Depends on your time frame. But again, are we closer to a bottom than we are a top? That is the question. Right? That is a question. Meetup in LA. Okay, if you guys would like a meetup in LA and you are in California, leave it in the description below, and I will judge off of that how many folks will be in for a meetup in LA. I'm serious. Leave a comment, or not description, sorry. Leave a comment below. Just say LA meetup or something. Spy train has left the station, blah, blah. ES 4050 is the bottom. Hello from Pico Rivera. What's going on, Mr. J? My time frame is days. Well, if it's days, then you already missed the boat. You should have bought calls with us earlier today. Is this a dead cat bounce? Depends on your time frame. This is a buy the news bounce. Yeah, don't leave it in the chat. I mean, leave it in the comment section below, like below the video. Type in a comment. All right. So let us go over fib levels, okay? So let's pick, I don't know, let's pick something like Tesla, and I'll go over fib levels with you. All right, so I did an Instagram Reels video about this, and by the way, follow me on Instagram Reels because I post market updates almost every single day, and I post trading tips almost every single day on Instagram Reels, right? Check the link tree down below and you will see all of my links, TikTok, Instagram, whatever. But follow me there if you want daily recaps. Okay. So a fib, the Fibonacci is used for two reasons. One, for extensions, but we won't talk about extensions here, which is when you're trying to project where a price can go to above, say, an all-time high price, right? So like if Tesla broke this all-time high price here of 1250-ish, where can it go beyond that? So you'd use a fib extension because that price is sort of uncharted territory. We're not going to get into that, right? The second way and more popular way of using a fib is to assess the extent of a downtrend or the extent of an uptrend, okay? So in this case, Tesla has been in a downtrend, okay? So Tesla has been in this downtrend here. Let me remove some of the lines here because it could get confusing. And by the way, leave all of your questions down below, guys, please, so that I can get to them. And don't super chat me. I'd much rather you give that money to St. Jude's, okay? So if you're thinking of super chatting me, just hit the donate button. Give the money to a much better cause than mine. So Tesla's in a downtrend, right? It fell from this 1150-ish level. So you want to measure this downtrend, meaning Tesla's falling and you're like, oh man, how far is Tesla going to fall? Well, this is where you would utilize not only support and resistance, moving averages, etc. One of the tools you can utilize is a Fibonacci retracement. And you're trying to measure this downtrend. So what you do is you take the most previous swing high and the most previous swing low before this downtrend. And you're going to try to measure where Tesla could actually stop before reversing, okay? And when you're measuring a downtrend, you would actually start your, when you're measuring a downtrend, you would actually start your points at the bottom and end at the top versus measuring an uptrend, which I will get into in a second. So we're going to be using, again, we want to measure this downtrend here. So we're going to be using the previous swing high and the previous swing low. And we're going to be measuring against that. So you would start at the bottom, right, where your 1 is going to be, and you would end at the top. So I'm using basically this as my bottom and this is my top, okay? And I'm measuring this. That's what I'm measuring, okay? So Tesla's falling, falling, falling. Now, all of these are important levels, or else they would not be Fibonacci numbers. But there are some key ones, right? And there's one called the golden pocket. This is between the 0.618 and the 0.65 fib levels. It's these two right here. Now, you guys will actually have to add the 0.65. So if you go into settings on your charting tool, if you're using TradingView or Thinkorswim or whatever, you're going to actually have to add another one. Like you go like this and type in 0.65. I already have it, so I'm just going to cancel this, okay? That's how you get this. And I have it color-coded in gold or yellow because this is the golden pocket. But all of these fib levels are important. However, really where you start getting into the crux of reversals is between the 0.382 and 0.618, okay? Between this right here is where you start looking for realistic reversals. Obviously, this thing can reverse at any time it wants. But this is when you start looking for realistic reversals, okay? And you can see a bunch of confluence here at 0.382, right? You could have bought calls here. You could have dollar cost average here. You could have just waited to see if Tesla is gonna break this. But there's a reason you see 0.382 here. A lot of algos use it, algorithmic trading as well as retail trading. That's why you see these things work. Yes, some of it is a self-fulfilling prophecy, but it drives me nuts when people say, oh, TA is just a self-fulfilling prophecy. Well, great. You want it to be a self-fulfilling prophecy because that means that most people are using those same levels and it actually makes trading a little more predictable. That's not a knock. That's actually a benefit, right? So 0.32, finally Tesla failed this. And now you could see Tesla finding support at 0.618. Now, between 0.618 and 0.65, again, is called the golden pocket. You could have bought calls here for an interim bounce. You could use this as a dollar cost averaging level. There's so many ways to play this. Once we broke the 0.382, you could have bought puts, expecting a potential take profit point at the 0.618. Either way, how you play it, that's a whole other discipline. But this is how you draw it. Again, you're measuring this downtrend and you want to see where Tesla is going to stop. So you take the fib level, the most recent swing low to the most recent swing high, and that's how you get your fib levels. Now, it works the exact other way when you're trying to measure an uptrend and you want to see where can the stock actually find some resistance. And that way you can actually incorporate, just like you could in a downtrend, in an uptrend, you could incorporate a number of plays, whether it's buying calls, taking profits at resistance, shorting at resistance, etc. But I'm trying to find a stock that might have run up. I don't know. Is XLE maybe a good one? Let's see. Well, XLE is nearing all-time highs. So, no, this is not a good one. I'm trying to find one where I can measure the uptrend for you. Maybe Coca-Cola. Let's see if we do a 4-hour chart. Okay. Not a greatish example, but okay. So right now, let's say that you want to measure this uptrend on Coke, right? This current one that we see here. The same exact way as you would opposite Tesla. You want to measure this uptrend, but instead of starting at the bottom and ending at the top, you're going to be starting at the top, taking the most recent swing high, let's just say it's this, and ending it at the bottom. So now your 0's at the bottom and your 1 is at the top, okay? And just for reference, I'm using this swing high and this swing low, and we are measuring this uptrend that we see currently. And you want to see where, where Coca-Cola might stop. Again, all of these are valid numbers, or else they wouldn't be part of Fibonacci. But you can see that Coke made a push past 0.382, finding resistance at 0.5. If it breaks 0.5, 0.618 is where I would likely, or not necessarily on Coke, but if I was looking at this and looking for resistance, I would likely enter a short or buy puts at this golden pocket here, right? Or look to take profits if I'm in a short-term swing or whatever. But this is exactly how you would draw it in an uptrend. Your 1 would be at the top, your 0 would be at the bottom, and you start your anchor point at the most recent swing high and end at the most recent swing low, and you are measuring this right here, okay? Hopefully that makes sense. I won't get into Fibonacci extensions here because I think this is already going to be a lot for you newbies, to those of you who are newbies, to practice. And then, Fib extensions are a completely different thing. So anyway, that's that. Let's see what Somox donated $20 to St. Jude's. Thank you so much for that. Thank you so much for that. Boss Serendipity says hi from NYC. What's going on? Any chance of a meetup in Tucson? Probably not, unless there's a reason to go there. What is the gold mine to invest to now? Oh, thank you, Leah. Leah, thank you so much for reminding me. Okay, let's talk about that. Anonymous donated $50. Thank you so much. And another Anonymous donated 20 pounds. Thank you so much. Amazing. All right. Need to look at Fib logarithmically. This is a logarithmic site, John. Slow Joe 98 donated $20. Thank you so much. What did the Fed say? Rewind the tape, JC. Already talked about it ad nauseum. Do they usually stop at 0.618? Well, if it gets to 0.618, yes. Good level 2 lesson Z. You're welcome. Thanks for the Fib explanation. Yes. Any thoughts on Nanook's thoughts and prayers? Ask a more specific question. Waiting for J Powell to say burr and point to his boys in the back. Can we download your chart setup? Yes. You will see a link in the description. Just put your email there. It will say something like subscribe to the watch list or whatever. Just put your email there and I'll send it to you. Or send an email to info@thetravelingtrader.com. All right. So let us get into, so this best investment right now to beat inflation. So this is what is called an I bond. Okay. This is a bond that is issued by the U.S. government. So it has the full faith and credit of the U.S. government. This can never decrease in value. This is one of the good things about it, meaning you're not going to lose money from it. Now, the reason that I'm saying right now, this is the best investment is because historically it has never paid this much. So currently, so the way that this is calculated is it uses a variable rate depending on inflation. And because inflation is sky high right now, the variable rate plus the current fixed rate is going to yield you 9.62% on an I bond. So what I want you guys to do, and I'm not affiliated with this at all, I'm just telling you guys this because I love you. Go to treasurydirect.gov. It takes 2 seconds to set up an account, okay? This is a government website. Go to treasurydirect.gov, and you want to look at I savings bonds, okay? And this bond will yield you 9.62% at least until October 2022 when the new rates are announced. So from May 2022 to October 2022, you're getting 9.62% annual yield. Tell me anywhere where you can get a risk-free annual yield of 9.62%. Even if you bought Twitter. Remember, there's a deal spread for Twitter because Elon said he would buy it for $54.20. Currently, it's trading at $49. You have about the same amount to make if you bought Twitter. But this is not risk-free because Elon can still back out of the deal. It's still subject to regulatory barriers and whatnot. What happens if this deal falls through? Well, then you're asked out because you bought Twitter at 49 and now it tanked to 30 something. This is risk free, meaning there is no risk here. You are going to get 9.62% annual yield at least through October 2022 and could even continue past October 2022. Here's the only drawback. You can only invest $10,000, up to $10,000. That's your max, okay? You can only invest up to $10,000 per person. However, if you are getting a tax return, you can invest an additional $5,000 of that tax return into the Series I savings bond. So $10,000, if you're getting a tax return, you could take $5,000 of that and put that into a Series I savings bond. So $15,000 max per person. Now, there are loopholes and legal loopholes where if you have entities such as LLCs, where you have different family members, etc., you can actually open up a separate $10,000 for each of those entities, right? Like if you have a trust, if you have a business entity, etc., you can open up a $10,000 I savings bond for each of those things. So you can get more than $10,000. It's just for you personally. If you're using just your personal, you personally represented, right? Just your personal social security number. You can only get $10,000. You can only invest $10,000 plus $5,000 from your tax return. However, that is still nothing to scoff at. That's a guaranteed 9.62%, more than you'll get anywhere right now, guaranteed. Anywhere, okay? So go to treasurydirect.gov, open up an account, and get yourself a Series I savings bond. Now, what are the stipulations? You have to hold it for a year minimum, okay? You can cash it out earlier than a year, but you have to hold it for a year at least. Now, if you cash it out early, after a year, if you cash it out before the 30-year maturity, then the rule says the last 3 months of interest are invalidated, okay? So let's just say you held it for a year and you decided to cash it out after a year. Well, then the last 3 months of that year, you would not get the interest for that bond. But that's it. So in my view, if you have money to park and it's just sitting there, instead of it getting sandblasted by inflation, you can put it into a Series I savings bond. Again, these are issued by the government. Again, I have no incentives to say this. I'm not getting paid for this. I don't get referrals or anything. This is a government thing that as an American citizen, you have access to, okay? So again, treasurydirect.gov, look for Series I savings bonds. That'll get you a guaranteed 9.62% annual yield, okay? Hopefully that helps. Hopefully some of you guys take advantage of this because I don't want to see you guys get raked by inflation. Now, this is amazing because the last CPI numbers were 8.5% year on year, meaning that even with that ridiculous number, you could still beat out inflation for a certain portion of your cash cake, okay? So there you go. Sam R, new member in your Discord. Very valuable information. Highly recommend it. Thanks for everything you do, Z. I would love an LA meetup. Thank you, Sam. Thank you for the feedback. I was drooling at the 9.62%, but only 10K. Yes. So, Mux, talk to your accountant and see what business entities and trusts you can set up, and you can actually then use more than $10,000. You can use $10,000 for each of those things. So like I have multiple LLCs, which I already did this for, right? But talk to your accountant. And yeah. All right. My portfolio just rocketed up over 2%. You and mine both. So congrats, and congrats to those who bought calls with us at the open as well, or near the open. Would you have any comments on taking positions in PaySafe? I don't like stocks like that, Michael. I don't like stocks like that. Moonbeam Magic, thank you for the bond info. Didn't know about it or how to get bonds. Yes, treasurydirect.gov makes it as easy as possible. Go there. Protect your money, folks. Pay safe. Yeah, I don't like stocks like that. I mean, you know, these are like I still don't understand how after all of this beating, people still want to invest in bullshit. Like I don't get it. I don't get what is it because it's cheap? I mean, there's fractional shares available. Anyone can invest in fractional shares. So if you were gonna put $1,000 in PaySafe, you could take that $1,000 and put it in Google. Like, why pre-split, right? Like, I don't get this. No, I don't like pay. I would not hold anything like this. You know, there was a time when meme stocks were a great trade, and a great hold for a year or two. But when I say meme stocks, I don't really mean that. I mean high beta stocks that are still very risky, that haven't turned a profit, XYZ. You know the drill. But, I mean, why? Like, just why? Why would you want to invest heavy amounts in that, right? If you do invest in that, make sure it's a small percentage of your portfolio. Like, the market has given you an opportunity. The market has given you an opportunity right now. That opportunity that the market has given you, it has told you, hey, mother effer, balance your portfolio. As I've been telling you time and time again, balance your goddamn portfolio. Now the market is in a bear market, and the market is telling you, hey, you wanted Apple cheaper? I gave it to you. You wanted Microsoft cheaper? I gave it to you. You really, really wanted Amazon to tank? Guess what? I made Amazon tank. And now you're thinking of buying PaySafe and Chegg and I don't know, PayPal and SoFi. Like, why? Why? I just don't get it. You know, after the dot-com crash, a lot of those stocks did not make it again. And I'm willing to bet that a lot of these meme stocks and high beta stocks that folks have seen and have been buying in 2022 and people on YouTube have been recommending, those stocks will never see the light of day again. I guarantee you this, okay? Like, do you really think Roku is going to trade at $500 again? Do you really think QuantumScape is going to trade at 133? Do you really think that Rivian is going to trade at $180? Right? Do you really think that Zoom is going to trade at what, $600? I mean, you know, the list goes on. Do you really think that DraftKings is going to trade at $75? I mean, these valuations just got absolutely spanked. Do you really think that T-Doc is going to trade at, what was T-Doc trading at? $300? It's currently $39. Look, I don't mean to shit on you. I'm just giving you an unadulterated view of how markets work historically, how boom bust cycles work historically, how bubbles work historically. We were in a legitimate bubble, okay? Just the same way that we saw a dot-com bubble, we saw a bubble in SPACs, meme stocks, high beta stocks, COVID-dependent stocks. We saw a complete bubble burst. And the only reason that the markets didn't absolutely spill to the floor is because we still have powerhouses like Microsoft and Apple and Walmart and Coca-Cola reporting stellar earnings, knocking it out of the park, upholding the rest of the shit market, right? But over 90% of stocks were in a bear market. Over 90%. That's why I always say that 2021 looked so different for so many people. 2021 was really a year that I'll forever remember as a stock market participant, because most of 2021, right? This is 2021 here. Most of 2021 looked like this. Okay? This was entire 2021 here. This is the beginning of 2021. This is the end of 2021. However, if you query most people online, they will tell you that they've had the worst year, maybe only now matched by 2022, which is valid because even great stocks got murdered in 2022, okay? But even then, the levels that we're at now on the SPY are the same levels that we were in September 2021, right? So it's all about context. And if you were in January 2021, you would kill for the levels that you were seeing now, right? So it's all about perspective. That's why 2021 was a very different year for a depending on your investor profile. Those who invested in great companies made out okay, and actually made out like a bandit. If you invested in great companies, let's just say you invested in the S&P index alone, right? In all 2021, you made 23% on your entire portfolio, right? If you invested in shit companies, you could have lost 60, 70%. Two different investors, right? So anyway, I'm not ragging on you. I don't get it. I don't get it. I don't get this rush to pour back into shitty stocks. Don't be allured by stock price. There's fractional investing. Look at stocks as companies. Don't look at them as ticker symbols. Don't look at them as a price, right? Like, oh, this is so cheap, it can't go down further. If that's the only reason you're buying the stock, don't participate. I'm telling you right now, don't participate, okay? Look at companies. Use something like Seeking Alpha. Use something like Tip Ranks. Learn how to look at a company's financials. Is it growing in revenue? Are its earnings per share growing? What do its financial ratios look like? You want to start looking at the businesses, average revenue per user, whether its daily active users are growing or not. What different businesses is it getting into? Look at all this stuff and make your determinations based off of these things, not off of, oh, this is so beat up, it can't go lower. Take that for what you will, brother. Take that for what you will. MR says, Z, you get it. Amazing analysis, creative algorithms, trends, explanation, plus always backing St. Jude. This is my favorite of yours. Appreciate you, MR. Thank you so much. Or Mr. Thank you so much. I really, really, really appreciate the feedback. It helps. All right. Let me go back up. Anonymous donated $5. Thank you so much. Appreciate you. Thank you, Z. We'll buy I-bonds then. Yes, I-bonds. I mean, it's safe. 9.62%. Where are you going to get that? Can Canadians buy bonds? Janet says. You guys have your own bonds. I'm not sure what Trudeau will give you for the bonds, though. Alex Solidus. Chow, mate. If you're asking whether Canadians can buy U.S. bonds, yes. It might be more complicated, though. I don't know that foreigners can register on the treasurydirect.gov site. But obviously, foreigners can buy bonds because, we sell treasuries to all kinds of countries. Russia has a large amount of U.S. treasuries. Saudi Arabia has a large amount of U.S. treasuries. China and Japan have large amounts of U.S. treasuries. So, yes, you can buy bonds as a foreigner. Whether you can follow the same exact process, I'll be honest, I don't know. Do your own research. But talk to your bank, Janet, in Canada. Talk to whatever your investment broker is in Canada. And yes, you can buy U.S. bonds as a Canadian citizen. How you invest in that procedurally, I don't know. Talk to your bank. All right. SoFi is no good. Rich, come on, fam. What makes it good? Okay, let me tell you this. What makes SoFi good? Don't tell me the price, or don't tell me it's a great business, or don't tell me it tanked so far, so I want to buy it. Objectively with numbers, what makes SoFi good? If you can answer that, then sure, buy it. Okay? Are you guys playing any earnings today? You know what? Surfer Boy 3000. Thank you so much for reminding me, because there's only about 40 minutes until market closes. So I do need to get off and play earnings, which I will send in the Discord. By the way, for those of you guys that joined late, please leave a thumbs up, because it helps others find the stream. Also, you can get $10 off the monthly subscriptions if you use the coupon code, the limited, ultra limited coupon code in the description below. Use that. Use it. Take advantage of it. Get $10 off. And I will be sending out the earnings plays. What do you think of Paul Tudor Jones' advice? Depending on what you're talking about. Can you do option play on Tesla for us? Yes, I would like. Not on Tesla. No, on Tesla, It depends. Sagar Bansal. Hey man, I sort ETH at 28.50. Did you mean short? Well, good job if you did. Is there a chance to come back? Obviously, yeah. There's always a chance. Scotty G, can you share thoughts and guidance on using triple leverage ETFs versus... Yeah, you want to look at each ETF and how it's calculated. It's usually a series of trades that the money manager tries to utilize or tries to incorporate in order to match the performance of the underlying. Every leverage ETF is different. Leverage inverse ETFs, you definitely don't want to hold, okay? And if you need an example of why that is, just pull up any inverse leverage ETF and you'll see what I'm talking about. But leverage ETFs, yes, they can move way more violently. If, say, SOXX has a very violent day and drops 40%, that leverage ETF can almost lose its value. But a really unrealistic, anomalous, negative scenario has to happen for that to happen. But look up how SOXL is calculated. You definitely don't want your entire exposure in a leverage ETF. So if you want to invest in SOX, you might want only 20% of that investment to be in SOXL and 80% to be in SOX, right? Good stream, peace all. LOL, bingo, really? Boy, bye. I think someone was trolling about bingo. Oh, maybe not. Peter Richter, what about bingo earnings? What about them? I don't know. Great show as always. What's up, Z? What's going on, Yash? There's no American security we can't buy other than some OTC stuff in Canada. Yes. The only thing good about SoFi is 1.25 APY in your savings and checkings. Well, and now you have iBonds where you can get 9.62. All right, guys. I appreciate it. I'll answer this. Naza, how do you expect the market to behave over the next month? I think that if the next CPI numbers that come out this month are lower than last month, the market will go back to all-time highs. It might be ugly, but it will do it. That is my take. All right. For those of you that are not part of the Discord and want to be a part of the family, come join the Discord. Otherwise, thank you guys so much for joining. 0.5% interest rate hike on the Fed funds rate. Jerome Powell is going to start reducing assets off of the balance sheet June 1st. And yeah, the market is really liking what it sees. All we need now is the next CPI numbers to come in less than last month. And I think the market sees all-time highs pretty soon. Anyway, traders, that is it for this video. Leave a thumbs up on your way out. I love you all, and I will talk to you on the next live stream. Peace.